Hi, my name is Peter Garner and I'm the equity strategist at Saxo Bank. We are here to talk about the earnings season, which is now in full swing, and we have been in it now for a couple of weeks, and we now have around 200 companies reported in the S&P 500. So we have what I would say adequate data to come up with some conclusions so far. And one of the main conclusions is that energy and materials have been one of the weak performing sectors when you look at sales, which is actually quite key right now, as I also spoke about a week ago. You can see it here on the chart. Energy has seen an aggregate fall in sales of 5%, and in the other range we have the two winners, which are healthcare and the financial sectors. But I would like to emphasize that we have ExxonMobil and Chevron reporting tomorrow, and we expect that those two companies, given the run-up in oil prices, will report very solid figures, and that could actually change this picture on energy. So when we get further into the earnings season, we might revise our take on it right now. But so far, I would really highlight that financials are the really big winner in this quarter. And you can also see that on the share performance in several of the big major financial U.S. banks. And one of the really big surprises, maybe it's difficult to see here on the chart, but actually the second best surprise in sales, and also one of the best surprise ratios on earnings, was actually Goldman Sachs. And if you remember, the street was expecting $7.8 billion in revenue for the fourth quarter, and it came in at 9.2. So they had a spectacular quarter, and the stock also reacted positive to that. So going into the earnings season, we were quite muted, and we didn't have very high expectations for the earnings season. But so far, it has actually surprised to the upside, given our anticipation, which is positive. So, but we have these big earnings releases tomorrow in the oil industry, and it'll also be important for the global sentiment and the global industry. So we'll have to look for that. But when we get into the next week, we'll sort of have had the half of S&P 500 companies reporting, and then sort of the earnings season begin to fade from there, and then we turn back to the macro economy. But so overall, and also the guidance for companies so far has been quite, I would say, optimistic but cautious. So it tends to be that the big industrial firms with Honeywell and United Technologies and General Electric, they're all seeing some positive markets and development in 2013. So overall, so far, it looks good.